So let me ask you about the situation with respect to a couple issues you've talked about, climate change, for example, or racial inequality. The Fed has not historically been somebody that's supposed to be focused on climate change, and you're focused on the unemployment rate, but not under the statute, whether it's minority unemployment rate or white unemployment rate. How do you assess these issues that are not really in your statute, but are now important in terms of determining how the economy is moving forward?
So they're two different issues, and there are differences and similarities. But the point is, both of them we see only through the lens of our existing mandates. We haven't gotten any new mandates. So take climate change, for example. The reason we're focused on climate change is that our job is to make sure that financial institutions, banks, particularly the largest ones, understand and are able to manage the significant risks that they take. And the public will expect us to do that. Climate change is just another one of those risks. And increasingly, the large banks very much realize that. If you talk to leaders of these large financial institutions, they're very focused on what climate change is going to mean for their business model over time. So it's within the scope of that mandate. It's similar with inequality. We have these persistent disparities, racial, gender, and other disparities in economic outcomes in our economy, and they kind of hold the economy back. You know, we all want an economy where everyone has the ability to contribute to and benefit from the prosperity that we have in our great economy. So really, our focus is on the gaps that we face, and we call them out. We talk about them. We've tried to incorporate into our monetary policy framework the thought that maximum employment, our statutory goal, is a broad and inclusive goal. That's a reference to those issues. And also, I think we now realize that unemployment can go low for quite a long time without inflation being a problem, which will also tend to help those groups. On that, I would just stress, of course, we can't be the primary policy organization that treats either climate change or inequality. We see it through the lens of our existing mandates, but those are very much issues for elected representatives and for other parts of the government, more than they are for us.
When you come to work sometimes, you see people in tents, living in tents, homeless people living in tents. Your mandate is not to go solve that problem necessarily, but is there anything you think the Fed should be able to do or should be given more power to do to help people who are really suffering in the pandemic?
We're definitely not seeking any new authority, nor are we, as I mentioned earlier, we're not the agency that has the most direct authority over that. I just happen to see it, though, right here on Virginia Avenue. There have often been a couple of tents at this end of town where there's some open space. But now it's big. It's a lot of tents and it's a lot of people, and you can't miss it. You drive by and you think, and it has to be because of the pandemic. It just has grown a great deal, and it really struck me it strikes me every day as I go by it. So, how does that play into what the Fed does? I think we need to keep those people in mind. Really, we don't have tools that deal directly with them, but those are people. Many of them probably were working in February of 2020 before the pandemic hit. And I think they need to be in the room with us as we make our decisions about monetary policy. We need to be thinking that it's not just the headline in the aggregate, it's also the people who are at the margins of the economy. We just keep them in mind.